So, hello everyone. My name is Lauren Antone, and I'm the Senior Marketing and Events Coordinator at MAR, as well as the producer of our free webinar series. Our webinar today is utilizing your insurance program to reduce risk. This webinar will cover what policy covers what and will address the thorny issues of selling agent-owned properties, dual agency, fair housing discrimination, and more. Learn what the most recent claim trends are and how policy language can help you guide procedures for your agency. After our live session, the webinar will be recorded and added to our website at marealtor.com under webinars. If you have any questions throughout this session, please type them in the bottom of your chat box on your screen, and we will hold a Q&A afterward. Our presenter today is John Torvi. John is the Vice President of Marketing and Sales of the Landy Insurance Agency of Norwood, Massachusetts. John has been in the insurance industry focusing on the needs of business owners for over 30 years. He holds a bachelor's degree from Providence College and a master's degree from Springfield College, and is a frequent speaker and contributor to professional journals and conferences for the real estate, legal, accounting, and insurance industries. The Landy Agency is a national leader in providing professional insurance services for attorneys, real estate professionals, and accountants. Now, over to John.
Well, thank you, Lauren, and hello, everyone. Good afternoon. It's my pleasure to be part of the presentations today on risk management. I had a chance to listen this morning to Attorney Stetson's presentation, and he had some good things to say, and I think what we're going to talk about this afternoon will bridge that and kind of follow that conversation. Please, I encourage your questions and look forward to answering them later on. So thanks again for joining us and for the introduction, Lauren. So we do have a few objectives for our webinar this afternoon. As Lauren mentioned, we want to identify some of the risks and pitfalls facing agents and brokers. And, you know, the old traditional common claims we've seen for years, year after year, month after month. Some of the new risks and new claims that we're experiencing in today's real estate environment, and the what the heck is just the odd stuff that you can't imagine happens, but really does. We want to add into that what your insurance policies will cover and what they don't in relation to these claims and the risks that you face every day, what you can insure and what you frankly cannot insure. And therefore, how do you manage all of these things to protect not only your yourself, but your brokerage, your company, and the people that work on your behalf? So we can't avoid risk. Risk is everywhere. No matter what we do in our life, we know that it contains some element of risk. And certainly when you deal with the public, and involved in the transaction in many cases of their most treasured possession and most emotional purchase, the risk is certainly heightened. And we can manage risk, but we can't eliminate it. It's impossible to live in a risk-free life. And it's not just what you do and what your team does. It's not just the professional services you provide. When we think about a real estate transaction, it contains a lot of different moving parts and a lot of different people. You have the representative opposing, so to speak, of the buyer or seller, whatever side you're on versus what side they're on. You have the lenders, you have the appraisers, you have the home inspectors, you have the buyer and seller themselves. There's a lot of moving parts, and if something goes wrong, or is perceived to go wrong with any of that, there's a really good likelihood that you as a brokerage, you as a broker and the agent representing the parties involved will be brought into that lawsuit again. So when we talk about risk, you can control and manage some of it, but you sure can't control the other people that are part of the deal. So identifying what that risk is has to be the first step in managing. So let's talk a little bit about what that really means. Traditionally, as I mentioned, year after year, month after month, we see the same kind of claims. the usual suspects. There was a lot of talk this morning about disclosure. Disclosure represents on an industry-wide basis, not just with our program, which is a national program also, but disclosure claims, including non-disclosure, property condition issues, represent almost 50% of all claims made against real estate agents. Almost 50% have to do with what is said or what is not said about a property. When you factor in that Massachusetts is a non-disclosure state, the dilemmas of what your people have to deal with and say and not say, questions that they have to ask and not ask, or answer and not answer, it's very complex, and there's really no good answer to how to manage that, except by understanding what the risks are, what the issues are, a little bit of common sense, certainly. Fair housing claims are very common also. These claims tend to be very large. And we'll talk about the insurance coverage for fair housing in a few minutes, but in the mortgage meltdown of 2008, the housing crisis at that point, fair housing claims were very, very dominant, because we can kind of guess why. There were a lot of foreclosures, there were a lot of short sales, there were a lot of evictions of people in these subject properties. Since then and up until now, fair housing and discrimination claims have been regular, but not overwhelming. I think we have to look to our current environment right now related to properties that perhaps are being sold at overinflated values, the pending end of the eviction moratoriums, and what will happen consequently, again, getting into a situation where agents are involved in evictions and short sales and foreclosures, and will we see an uptick in fair housing and discrimination claims? I think history tells us we will. So it's really important to be aware of where your coverage is, if you have that coverage at all in your E&O insurance policies. Breach of contract, misrepresentation, negligence, these are all ways that lawyers can get at you. Whether you're talking about a misrepresentation of a property, or something else, the plaintiff lawyers will use the tactics of claiming that you've had a breach of contract, you've misrepresented something, you've been negligent, and then the bondos are open, so to speak, and everything that you've done, that your agent has done, is subject to scrutiny at that point. Certainly, we're aware of privacy breaches as a major issue right now for real estate firms. Just the number of cybercrime and wire transfer fraud claims that we're seeing are rising exponentially. The bad guys get more sophisticated every day in trying to get to you, your information, and the money that you may be involved in holding for other people. And then there are other examples of client versus agent conflict that come from just the emotional and cost nature of the transaction and the sales. Some things that insurance really doesn't address, and what we see happening on a fairly regular basis, really have to do with agent and broker relationships, agent to agent relationships, and how those can be identified and managed. So agent to agent issues related to miscommunication, including substituting poor and inaccurate, tardy, non-existent, and incomplete information that ultimately results in a deal that can go bad. Ethics, fraud, and commission issues certainly exist. We see enough claims related to alleged fraud and commission disputes that we know that there's an opportunity for communication between agents to be substantially better. What about agent versus broker issues? Again, commission disputes, fee disputes, and miscommunications over fees and working conditions, lack of opportunity, discrimination, insufficiently developed guidelines and procedures. We're a big advocate for enhancing your independent contractor agreement by including a very robust policies and procedure manual that all of your agents are aware of and are trained with and frankly have to sign off on. And what you put in that policy and procedure manual is really up to you how you want your brokerage to operate. But things that arise that we see all the time include things like whether or not you'll allow property management, whether or not you'll allow broker price opinions, whether or not you'll allow dual agency, selling of agent-owned properties. These are all things that are helpful to address ahead of time rather than when a problem rears its thorny head. Other things that you can include in that policy and procedure manual is a section on what happens if there is a claim. Who pays the deductible? What portion of your deductible is your agent responsible for? Again, you want to have that information out ahead of time. You don't want to wait till you're receiving the lawyer's letter and your agent says, oh, by the way, boss, I'm getting sued. And you say, well, the deductible is $5,000 on my policy. And the agent says, what? I'm not paying that. So again, wrong time to have that kind of conversation. We, again, strongly advocate for a well thought out and developed procedure manual that's relevant to how you want to run your agency and what your expectations are of your team. Remember that in order for an Arizona Emissions policy to respond to a claim, they all contain language that basically says something like coverage will respond when the act is under the authority of and with the knowledge of the named insured. In other words, the named insured, your firm, your company, I think, Lauren, we're talking to all brokers here, has to give the authority to an agent to do whatever. And if that agent acts outside of your authority, two things can happen. One is the insurance company can deny coverage, or two, you as the broker owner, the named insured, can deny coverage to the agent. Both scenarios are really messy, and you don't want to be there. It kind of goes back to that policy and procedure manual that I was mentioning earlier. You want to, again, make sure the agent is acting within your authority. I get calls quite often that say, hey, my broker won't let me do property management. Can I buy insurance and do it on my own? Well, the answer is no, because we know that in Massachusetts, an agent needs to work under the authority of a broker. But more importantly, why are they calling me? There's some kind of uncertainty and lack of clarity in what's happening in that brokerage that the agent feels that they can step outside of their brokerage and work on their own. So address these things ahead of time would be my recommendation. Again, you don't want to be dealing with this when the claim comes. Agent versus everybody else. Again, we mentioned the things you can't control. You can't control what the lender, the appraiser, the home inspector, and the other agent on the transaction says or does. You can't control that. But again, you can kind of manage your team in terms of how to respond to different things. Does your team know what interactions that they can have or cannot have with an appraiser, for an example? Everybody wants to complain about the appraisers, but do we know that there are ways to work with them and help to get an appraisal that you feel is accurate and represents the property and the valuation of the property as accurately as you'd like to? So again, you can control your team and identify what those issues are. So what do these insurance plans actually cover when it comes down to the nitty gritty about what everybody does on a daily basis? Let's talk about E&O insurance first. Um, Errors and omissions insurance is coverage for the professional services that your firm provides. Professional services. So that tends to mean that some things are excluded because they're not considered professional services, but professional services would include things like sales, representing buyers and sellers, renting, leasing, property management, appraisal services, auctioneering. Um, and you'll see as we go along here, there's a couple of little stars here. And that's my notice to tell you that every insurance policy is different. They cover things differently if they cover them at all. Some things, some policies will cover more than others. Some policies will require that you add on coverage, perhaps for an additional cost or maybe with an endorsement to the policy. But every policy is different. So what you might want to do is take a look at your policy, see what's covered and what's not. And if you're doing anything within your firm that is not covered, or requires some additional endorsement, either stop doing it or go to your insurance carrier and obtain the coverage that you need. And one common area, again, is in the property management area. Not all policies automatically cover that. So E&O will cover your contractual requirements as part of your professional services, your regulatory and ethical requirements that not only the state, but your professional licensing requires. And yes, it will cover your legal defense. In other words, if you are the recipient of a lawsuit or even a disciplinary matter, a licensing matter, the first thing that your insurance policy does is provide a defense for you. It assigns you an attorney. You may be responsible for your deductible, but you want to make sure you turn over any claims, potential claims to your insurance carrier and let them act on your behalf by providing an attorney for you or working with you to get an attorney that both of you agree is a good representation for you. What does it cover? What does it not cover? Okay, so E&O does not cover fraud and intentional dishonesty or wrongful acts. Now, this morning, the attorney, kind of accurately said that the insurance policies, E&O policies, will not cover intentional acts, and you're on your own. That's true with a caveat, okay? Because just like when you get sued, you're not proven guilty or innocent, so to speak, at that point. That's what happens during the lawsuit process. You can't prove fraud or an intentional act when you get served with the letter from the lawyer. That stuff has to play out during the actual lawsuit. So the policies will actually say something like, we will defend you until the point where a fraud is proven or an intentionally negligent act is proven. At that point, we can cease our defense of you. So the insurance company just can't say, hey, we got this letter from a plaintiff attorney, you're guilty of fraud, see you later. I mean, it can't happen like that. The process has to play out a little bit. So the insurance company will continue to defend you and act on your behalf until and if fraud or intentional negligence is proven. E&O policies will not cover commission disputes. They will not cover broker agent disputes. Going back to that recommended policy and procedure manual to address these things there. Under an insurance policy, and I should say under most insurance policies, again, because they're all different, the definition of who is an insured will include things like the owners, any board of directors, employees, independent contractor agents, past and present. So the agent is considered an insured under the policy. Therefore, the policy covers them for everything that they do. But they're an insured, you're an insured. You can't sue each other under the policy. You can sue each other all you want. You just won't be insured for it. The insurance E&O policies will definitely exclude any claims related to virus, contamination, spread of bacteria and spread of virus and so on. Certainly a topic that's very, very hot right now, unfortunately getting hotter, but recognize that E&O insurance will not cover any claims related to the spread of any virus, contamination, resulting illnesses, and so on, loss of use of properties and all of that. What does that mean? I'm going to sound like a broken record. It means you address it, ahead of time in that in your agency procedures. How are you managing showings? How are you managing open houses? How are you managing people driving in the car? The public driving in a car with your agent going to a showing or an open house and so on, because you don't have insurance coverage for that. The policies will not cover discrimination, harassment, or misconduct, and that includes within your agency, and it will also include outside of your agency if the public perceives that one of your representatives is acting in a discriminatory way. However, there is a caveat to that with some policies. Some policies include fair housing and discrimination coverage. It's a good thing to have, and you want to make sure that your E&O policy does have fair housing and discrimination coverage. There is limited language in that policy, however, for fair housing and discrimination, and often a limited dollar amount of coverage as well with fair housing. For example, if you have $1 million of liability coverage in your policy, your fair housing coverage, if you have it, might be $100,000, $250,000, $500,000, whatever. It's typically not that $1 million worth of coverage unless you've had the opportunity to buy up, and you did. And the reason for that, again, is fair housing coverages are nasty, they're expensive, and the insurance companies are limiting their coverage and their exposure to that. So what does a smart plaintiff lawyer do? If the allegation is discrimination, fair housing issues, they will sue you against the fair housing language in your policy if you have it, but then they'll also go and sue you for something else. Again, that negligence, breach of contract, and so on. So they can also try to access the full policy limits. It's really all about the money, okay? And that's what the plaintiff will do. So it's not unusual that if there's a fair housing claim, you're also going to see an associated claim of negligence or breach of contract. The plaintiff's lawyers are smart. They're going to find a way to get at you and get at those policy limits. But let's start with the fair housing coverage. Go back and take a look at your policy and find out what you're covered for and how you're covered for under the fair housing policy language. Also not covered are things like misappropriation of funds, commingling of funds, whether intentional or not. That's very important. So even if it's an error on the part of your agent that they or your bookkeeper, your admin person, or you put that money in the wrong account, and it appears to be an instance of commingling, there's probably no coverage for that, whether, again, it's an error or an intentional act. As I mentioned earlier, there's potentially also no coverage for actions taken without the knowledge and the authority of the named insured. So these are things that you definitely have to watch out for. Here's the risk that we talk about. We've identified these things. Now, frankly, you have to manage them because you can't find insurance coverage for most of this stuff. Some things that may be covered go back and read your policy to find out. Your policy may include some coverages for cybercrime and security instances and even social engineering coverage. Those coverages tend to be limited and definitely don't have the breadth of coverage that a full-blown cyber policy might have. But you may have some coverage for it. You may have some coverage for agent-owned properties. Similar to dual agency, the sale of agent-owned properties are fraught with risk. Most policies will have specific language and requirements related to coverage of agent-owned property sales. If you allow that in your brokerage, understand what your policy requires for coverage and implement that with your agents. It's very just like dual agency, it's really difficult to identify who you're representing and in whose best interest you're acting with. Ultimately, it's a lawsuit that you'll lose because you can't, in good faith, represent both sides of the transaction. If it's an agent-owned property, we would recommend that you have someone else in your agency represent and list the property rather than the agent that owns the property. At least you're creating the appearance of a arm's length transaction and an impartial representative. Still the same firm, but at least it's not the same person. Same thing with dual agency. It's recommended that you have someone else represent the buyer and someone else represent the seller rather than having one agent represent both parties, because again, you can't, there's just no way to represent that you've been impartial and fair to both sides. We hate to see those lawsuits because we know we're going to lose them. So again, those are some things you can manage at that end. Bodily injury and property damage may or may not be covered under your E&O policy. Typically, it's coverage that's excluded and then added in. Some policies might cover bodily injury and property damage only at an open house, but will exclude that coverage for a showing. So you may want to take a look and see what that coverage is for you there. We talked about fair housing discrimination, and we have not talked about lockbox coverage that results in bodily injury or property damage. So while bodily injury and property damage may be excluded, you may be having that coverage added in with coverage for lockboxes and the use of lockbox, excuse me. My apologies. Lauren, I'm going to take a minute if I could.
Sure.
My apologies for that, folks. I've got a bit of the fall allergies coming, so I apologize for that break. And again, just a reminder that coverage really varies by carrier and by policy, so read what you have. What about office general liability and business owner policies? Hopefully everybody has one of those, because it will fill out a lot of the gaps that your E&O policy has. Generally, these policies are designed to protect you against claims of bodily injury and property damage. So somebody slips and falls during a showing or an open house, and they claim it's your fault for negligence of care of the property. That's where this coverage will come in. So a lot of these policies exclude open houses, believe it or not. You'll want to take a look at your policy and see if open houses are excluded, and either try to get that added back in on your general liability policy, or see if that coverage is available on your E&O insurance policy. But you've got to fill that gap, because frankly, an open house is where you have the biggest risk of bodily injury or property damage taking place. They'll also cover things like business interruption. So if your office is damaged and becomes unusable, it would pay that any type of fees you might incur to get your office back in shape, and even any potential lost income. It might cover your auto liability for you and your agents. So if your agents are driving their own cars, and they get in an accident or at fault, and the person on the other side wants to sue your company as well, that's where your hired non-owned auto liability comes in. You have to take a look and make sure it covers multiple premises, not just your office. And it will not cover your professional services, and typically will not cover cybercrime and wire fraud. So you can see where some of these policies, come together, don't come together, and where the gaps might be. Cybercrime insurance, I'll just make not quite a plug for our company, but I don't care who you're insured by, really consider cybercrime, because it's just a really expensive way to lose your business, frankly. 40% of all small businesses that experience a cyber breach go out of business within 1 year. And that's a scary number. So cybercrime insurance, and we're talking about standalone true cybercrime policies, not an endorsement to your existing E&O policy, for example. It will cover things like data breach and data theft. It will cover a ransomware attack. If your network is hacked and held for ransom until you provide $5,000 of Bitcoin, for example, to the bad guys. It may cover wire fraud, fraudulent transactions, and social engineering. I say it may because those coverages are not typically in a cyber policy. They have to be added on. And so if your agency is involved in the handling of escrow monies and transferring funds, you'll want to take a look at obtaining that wire fraud and social engineering coverage. That's a whole different conversation. If you're not sure what the difference is between wire fraud and social engineering, ask me later, or reach out to me either in the Q&A section here, or reach out to me at my office. But it's an important distinction. Cybercrime insurance may and probably does cover things like lawsuits if you get sued, the forensic analysis of what went wrong, your data restoration, reputational harm, credit card industry fines, as well as loss of income. Some of these policies do not cover personally owned computers, which is weird, because probably all or most of your agents have personally owned computers. So if you have a cybercrime policy, you're contemplating buying one, make sure that there's no exclusionary language to the ownership and use of personal computers versus computers that your firm owns. Again, one of those things you don't want to be surprised after the fact. There's no coverage for anything that's intentional, of course. So if one of your agents, your admin person, or so on, is stealing money from you via computer fraud, that is not covered in the cyber policy. That's called a crime insurance. It covers employee dishonesty and fraud, and theft of company assets. It's again called crime insurance, and it does happen in the real estate industry. I may have used this example with you before, but we had a situation about 2 years ago now, where an admin person in a real estate brokerage embezzled $350,000 from the owner of the business. So it can happen in a real estate firm. But remember, like just about all policies, anything intentionally fraudulent will not be covered. Workers' compensation comes up a lot because we don't know, should agents be covered, should they not be covered, or do they have to be covered? In Massachusetts, they do not have to be covered, but you do have to cover through workers' compensation any W-2 employees, even if it's a part-time person. And what it does is it covers the medical expenses and loss of income for any employee who is injured in the course of performing a service for your company. The cost of that insurance is based on the payroll that is granted to those employees. You'll say I put paid compensation there also. In some states, it is required or recommended that the independent contractor agents are covered. If you're working in multiple states, make sure you understand the workers' compensation requirements in those states outside of Massachusetts. You can or cannot, or I should say you can or may not cover yourself or any other owners. Typically, owners will exclude themselves from coverage, and it does not cover any non-employment injury or illnesses. So if you're a broker owner and you're excluding yourself from workers' compensation, how do you protect yourself if you become ill or injured, whether on the job or not on the job? I would recommend you consider disability insurance, which protects your income for just what it sounds like, disability, and your inability to perform your professional services, and therefore resulting in a loss of income. So here are some of the things we recommend to manage the risk. We mentioned at the beginning that almost half of all claims have to do with disclosure of property conditions, or non-disclosure, which is the mirror opposite, but basically the same issue. Massachusetts is a non-disclosure state, which is surprising because Massachusetts is a relatively consumer-friendly state. And yet in this instance, and I guess this is my opinion, they're leaving the consumers unprotected. But from our perspective here, representing the real estate professional, it also leaves you in the lurch because you don't know what to do. There's not clear guidelines. If you're in California, or in Texas, there's a standardized forms that the seller has to fill out. In some states, there's even environmental forms that the seller needs to complete. And what that does, frankly, is it takes the burden off the seller's representative, because they don't have to ask all the questions, and they don't have to wonder what's the property all about. Unpermitted additions, environmental hazards, wet basements, leaky roofs, all of those things. The issue falls to the seller of the property, and there's a certain amount of protection then for the seller's representative. You don't have that in Massachusetts. Every day you're trying to figure out what you're supposed to say and what you're not supposed to say. But we would recommend that under your best possible abilities to disclose what you know about the property, and to recommend that the seller disclose what they know about the property. And I know that a lot of attorneys and the closing attorneys will say, no, that's wrong, or don't do that. From my perspective, when I see dozens and dozens and hundreds of claims come in month after month, year after year related to disclosure, including in Massachusetts, I would say, yeah, you probably should tell people everything you know about the property. And if that results in a repair of a leaky roof or a price reduction, I can assure you that that's way better than a lawsuit. That's my opinion. I think the attorney this morning represented their opinion, which is similar, but it's also my experience. There's just factual data that show this up in terms of the cost of lawsuits, the time that a lawsuit takes, and the energy that it takes out of the claimant. Most lawsuits against real estate agents, in our experience, are open for about 365 days. So that's 1 full year of torture, frankly, that you're going to have to go through. So whatever you can do to avoid that is preferable, I think. So you want to suggest, and everything should be in writing, that there's a third party diagnosis if there's a potential defect. It's okay to disclose a deep property defect or condition, okay, if you know it. If you don't know it, uh, it's kind of the same deal. You want to recommend that the buyer instigate their own investigation of this. The worst thing that you can possibly do, one of the worst things that you can possibly do, is say, there's a leaky roof. And I think it's because there's some missing shingles, or the flashing is defective, or the basement is wet because of, or we think that the zoning is like this because of. You want to disclose and not diagnose. Okay, you want to have a third party expert come in and identify the problem and make any recommendations as to what needs to be done to remediate it. You don't want your agent saying, yeah, there's a leaky roof, I think it'll cost you about $5,000 to fix it. Okay, you'll get sued for that, because in most cases the agents frankly will be wrong, and it's a very hard situation to defend if you're the lawyer trying to defend that agent. Be aware of government guidance on eviction moratoriums. Very hot issue right now, especially if you're the listing agent and you're managing, renting, or listing, especially multifamily or investment properties. I mentioned that the brokers should have a transparent agreement with their agents. One of those points that probably you might feel like I'm beating into the ground, but again, we know that so many issues can be remediated or avoided even if you have that agreement in place. And some of the things to put in that agreement, again, to repeat myself, property management, commercial sales, BPOs, deductible shares, commission structures, fees, expenses, owned property sales, use of computer networks. Are your agents mandated to use your computer network, your email server, and so on? Or can they do it on their own? They're able to use a Gmail address, for example, for their professional communications. Certainly guidelines in your agency for employee and agent harassment and discrimination and other work-related issues. If you do have a claim, you should have a policy for that and a designated person in your firm who is going to respond and manage the claim. Typically, it'll be the broker owner, but maybe not. It could be someone else. But you want to have a person managing that, and you want to have a procedure in place that states that if there is a claim, that no one is allowed to speak publicly of it. In other words, the agent does not go on Facebook or on LinkedIn or any other social media site and say, how dare they sue me? I did nothing wrong. Everybody in town knew that, you couldn't put a third bedroom on that property. Why are they suing me? You don't want that happening. You don't want the case to explode on you. And certainly anything that might approach a libel or slander, say like, it's not my fault, it was the other agent that screwed up. It certainly wasn't me. So you want those things clear and in writing, and have a policy in place for what happens if in fact there is a claim. We know that about 1 in 4 agents will be sued at some point in their professional career. Same thing with a designated cybersecurity security member. You want someone who knows how to manage your system, can help with security issues, can help make sure that firewalls are in place, software is being utilized properly, and so on and so forth. Find that person in your firm, and again, it might be you, but get them working on that cybersecurity network and issues related to that. And again, guidelines for how money is managed in your agency, both internally and externally. Your actions can be defended. Remember that if your defense attorney comes in and say, okay, here's the claim, here are the allegations, what do we have that says that you were not liable? And you say, I don't know. The better response is, well, we have the documentation of all the communications. We have in writing that we recommended this to the buyer or to the seller, and we have their response here. Give your defense attorney everything that they need to properly defend you. That's their job, but they can't do it if they don't have the materials and the ammunition to go back and fight that lawsuit against you. So that's it in a nutshell. I think that the point is that you have to identify the things that can go wrong, and you have to put procedures in place to prevent them or minimize them if you can't prevent them. When you're sued, and I hate to use the term when, let's say if you're sued, be more optimistic. If you're sued, that's not a presumption of liability. Okay. The attorney this morning talked about all the Massachusetts statutes and all of the previous cases and case law that work for and against you. At the time of the lawsuit, that's irrelevant, frankly. Anybody can sue you for anything that they want. And liability is proven afterwards in that long 365-day battle that transpires. Remember that anybody can sue you for any alleged act, and having these things in place, your procedure manual, your guidelines, your expectations about how you're going to manage the risk and the people that can create risk for you is essential if and when that lawsuit comes. So thank you. I hope this was helpful to everyone. Definitely interested in hearing your questions and comments. Lauren, do we have anything?
Thank you so much, John, for your presentation. If you have any questions, now is the time to write them in your chat box. It looks like we don't have any questions at this moment. And okay, so you have your screen up that shows your contact information. If you would like to contact John, go ahead and screenshot that or write down his phone number or email address. We'll just give it a minute or two.
Not too hard to find me.
All right. Well, that looks like nobody has any questions today. So
well, thank you all.
That means that you just did a really good job, going through everything. So as a reminder to everyone, this webinar has been recorded and will be available to view in the next few days on our website at marealtor.com. You'll find it under webinars in the green archive section, and you can find any upcoming webinars on that page as well. Before you close your screen today, you'll see a survey. If you would like to fill that out, we appreciate your feedback. So thank you so much, John, for your presentation, and thank you to everyone for joining today.
Thank you.